The management of Zensar Technologies, Mr. Ganesh Natrajan, and Vice Chairman of the company, is joining us in the studio right now. Mr. Natrajan, thanks very much for taking out the time.
Sure.
You want to run us through the anomaly in the revenues as well as the profit figures?
Well, actually, this has been a slow quarter because two of our major clients have these, what they call planned shutdowns in December. Also, our infrastructure management business has been a little slow this quarter. But the good news is the order booking has been fantastic. In fact, we just signed one of our largest deals. It's a $24 million deal with an insurance company. Given the, I think the traction we are seeing in the orders, I think the next few quarters will be excellent. And we are still very much on track. All our 4 verticals are growing over 14%. So in terms of making our numbers this year, as well as, of course, continuing to grow next year, it looks very good.
All right, so you're saying that this is just one-off because of those 2 big clients that you had?
The quarter we always expected to be slow because of the December shutdown. And I said IM was a little slow. Some of our clients have moved their on-site business to offshore, which really means that at this quarter it's low. But the good news is that it will actually benefit offshore revenues
next quarter onwards, and that will help in margins also going.
Oh yeah, absolutely. In fact, we're still looking at a very robust growth next year. In fact, we are actually planning for a 15% growth in revenue, higher in profits next year. So I think the outlook is very good at this point of time.
So no worries about 11.5%, that's the hit ratio for margins, EBITDA margins?
Well, margins, EBITDA certainly, but in fact we are looking at moving back to a double-digit profit after tax margin for next year. And that's something that we had actually mentioned to the markets as well. So I think very much on track because our integration with our acquired company, Akebia, that's going extremely well. So you'll see the benefits next year. We are also doing a fairly significant cost reduction exercise, which is actually reflected in our numbers with one of the major consulting firms. And looking at best practices worldwide to be implemented in Zensar. So you'll see the benefits of all that hopefully this quarter and definitely next year.
Into the next few quarters, it's going to be more about, like, you've acquired one big large deal right now. Is it going to be more about deal acquisition or ramping up of deals that you already have?
I think it's more because I think most of our existing customers are saying that, look, let's look at long-term managed services contracts. Now, long-term automatically means you can invest. There is much more predictability of revenue, so that's happening. The second is the 4 verticals we're focusing on, which is manufacturing, retail, insurance, and healthcare. I think all this is ramping up, so we see no slowdown in that whatsoever. And I think given the positivism with President Obama coming in again for the second term, I think the core markets of the US, of Africa, where we're doing extremely well. So that's all very positive. So I'm very, very sanguine about next year's prospects. I think things will be extremely good for Zensar and hopefully for the industry as well.
What do you say about the deal pipeline, leaving aside this big deal that you've got?
See, right now we have a deal pipeline of over 140 million. And interestingly, 104 million out of that is in the infrastructure management space. So there again, I mean, this ranges from deals from 5 million to about 25 million. So it looks very good. So we had a deal pipeline of 140 million going into this quarter. We signed almost $35 million of new business, plus the 24 million, which was last week. So given the signings, which are not slowing at all, I think that's why we're very positive.
Which segment is going to be the key contributor?
See, for us, it's always manufacturing and followed by insurance. Insurance currently doing extremely well. I mean, just to give you a sense, if you look at year on year, the manufacturing business is growing 25%. The insurance business is growing 18%, which is exactly where we want it to be. So similarly, new service offerings like SAP is currently growing 23% for us. One of our largest clients, which is continuing to grow in double digits. So I think all the parameters that we measure in terms of how's the business looking very positive today.
In terms of geographies?
Geographies, I mean, we are uncomfortably high in the US, it's 72% of our revenues. But the focus geographies, which are Australia, South Africa, again growing extremely well. Europe, I think, for everybody is slow, but we have signed a couple of good deals in continental Europe, including one of the very large government agencies in Europe. So it's looking good. I have no great ambitions for UK or Europe for next year. But I think if we stay in there and continue to grow in Africa, Australia, and of course the US, I think we're in good shape.
All right. You want to talk about the client sentiment at this point in time in terms of vendor churns as well and what's happening there?
See, what's happening in client sentiment is, I mean, I think it's not as complicated as I think we sometimes make it out to be, because they're very happy doing work with existing vendors. However, it is a fact. I mean, one of the reasons why people like us have benefited in terms of deals is a lot of customers are saying that, look, maybe our wallet size is not going to be as big next year as it was maybe last year. So they're very willing to get mid-tier companies into the party. So today we are competing head-on with many of the multinationals because people feel that, look, if it's a $10, $15 million deal, why not Zensar? Because they might give us more attention, they might be a better company to work with, And I think so long as we keep our delivery top class, which is our objective, even the best practices exercise we're doing today is because of that. I think we're perfectly in shape. So our sales is kicking, we're getting large deals, delivery is absolutely top class today, and I think that's the parameters we look for.
And that's what most of them had pointed towards. It's not about the pricing that you give the clients, it's about the deliverables.
I mean, there's always going to be, I mean, I wouldn't say there is a pressure on pricing, but there's going to be very little upward movement in pricing. Okay. So I think the goal for a company like ours is always to look for new clients, which will come in at higher prices, and to stabilize pricing with existing clients. I mean, try and keep negotiating for a 0.5% here or a 1% there. I mean, that's really what happens in terms of the market.
All right. Wish you all the best, Mr. Natrajan, for
Thank
the
you.
coming Ficoras. Thanks very much for
Thank
joining
you.
in.
Thank
India's #1 news app. Just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.